Alrighty, we should be recording as of now. So, kind of the same thing, guys. If you have any questions, go ahead and ask. We'll do our best to answer them live here as we go, and we'll try to make sure we get them all covered. Tonight's is going to be very similar to any other options class. We're going to go over the markets, and then we're going to cover our positions. We have 4 actively open positions that we've put on in this room. We'll go over all of them. If we plan on taking maybe some profits on 1 or 2 of them, we will look to place some orders together. If we are just going to let them go, we'll talk about them and just let them play. So, and then after that, I do have 5 instruments here, all from relatively different industries and sectors. So it's something we can vote on as a group and see what we think would be the best for putting on a position. So with that being said, let's go ahead and talk about the markets here. I already have the SPY up here, guys. You can already see what I have accomplished here as far as drawing this fib. And we've all talked about this. We talked about this last week. As this market was pulling back last week, on this exact day, we were talking about this push. And we're looking for another continued rally to the upside. Has my bias changed at all, guys? Do you guys think my bias has changed at all? As a group, do we think that we're still... Remember, we have 24 days left in our options. We would like to get rid of them between day 10 and day 20 on what we have. So we're going to be looking in that range. So you're basically thinking, let's just say a week to week and a half. For the next week to week and a half, what do you think we're going to have? Do you think we're going to end up down in here? Think we end up somewhat flat? Or you think we'll get another bounce here, guys? 3 real options, guys. What are we thinking here? Yeah, of course, John. All right. I can go ahead and tell you guys, not everybody's done writing in, but there's going to be a unanimous vote here from what it sounds. People are looking for a bounce. Even if you go back in time here, this is what I always do to reiterate myself or to reassure myself, sorry. If we ever do, say we got to pull back here, we got a little push, and then it pulls back again. Did we panic? Nope. Up we go. Another one, pull back. Did we panic? Nope. Sideways. We can do this sideways with the way we trade. So all these little pullbacks, do we panic? Nope. So is this one going to be the magic one that rolls down and sells off and causes us to take maybe our first loss? I don't know. Maybe this will be the one that gives us our first loss. But are you going to bet on that? I probably won't be. So me, I am also in basically. I agree with you guys. I can see us getting a bounce here. Are we going to get a bounce from here tomorrow? I don't know. It may be down here. It may be here. But in the next 7 to 10 days, or 7 to 14 days, I see us getting some type of bounce. Okay? Yeah, right, Bob. Bob says, no, I don't want a loss. Yeah. Gonna happen someday in here. But anyways. So yes, I am kind of in agreement with you guys. I do see us getting a bounce in the next week or 2. We may be dead wrong, and that's just, we know how to protect ourselves. We're going to talk about the same kind of thing that we talked about last week, because we talked about it a week early. And the reason we did that, because we did it on USO. So we're going to start with the oil trade that we have on. And I'm going to revisit the same topic that we did last week. Now, usually I like to share a new topic, but the rule that I'm going to put in place is very important. So we have 24 days left in this position till expiration. We are profitable. We are up maybe 40%, 30%. Am I going to try and take profits off right now? No. I thought about it, and I'm going to ask the group because we may go ahead and put a closing position out, but that doesn't mean I'm looking for the market to drop a little bit more before I get my order filled. So with that being said, I'm not looking to take whatever the market will give me right now. I want to see it give me a little bit more and go ahead because we have not broken anything. Remember last week? It was on this day that we did the class last week, and I got a ton of emails because we shorted after this day. So I got a ton of emails wondering, hey, are we covering here? Are we just going to take a small loss? And I couldn't get myself to say that because A, we weren't inside 20 days. Anytime 20 days. Now, let me explain what that means. So we sold the 35 and we bought the 37. So we sold the 35, we bought the 37. Anytime you do a credit spread, if we are in the money on our sold strike within 20 days, I'm at least going to get rid of half my position, if not all of it, depending on how I feel about the overall position. But at that point, we had 31 days left, and we were basically at our sold strike, and we did not break any technical level. We had swing high here, swing low, swing low. We had lower lows and lower highs still at that point. So what did I do? I didn't panic. And sure enough, we just stuck to our guns. We saw the market roll over. So what's the difference between then and right now? What's the difference between this day last week and right now? Highs, lows, nothing got better. There you go. That's all I'm looking for. I'm not looking for some magic answer. Nothing's changed. We still have higher or lower highs and lower lows. From a technical standpoint, we're not at support. We have room to come down here to these 33s, so I'm not changing anything. Today was a small up day on no volume. What is there to hurt me there? And not to mention, the IV is way up here. Thank you, John, for this indicator. But the IV is way high. We want this IV to drop. Okay, guys? So I'm not going to do much. I may look up here, guys, and place an order on this USO. I think we're trading somewhere around 40. I'm not going to look it up right now. Actually, I will look it up. Let's go ahead and go to USO. Let's go ahead and go to USO here, guys. Sorry about that. I'm going to go ahead and check it out here. Let's go ahead and check it out here on the USO. What can we buy it back for? At the mid for 36 cents. And we sold it for 54 cents. So we could still make a nice 35-40% on this, no problem. I'm going to look for another day. I want to see if tomorrow is going to roll over and start to drop again. If that's the case, we're going to get well over that 50% goal that we shoot for every time. If it has another up day tomorrow, we may be having to get rid of this thing for 45 cents or whatever it is and just accept the fact that we made a little bit of money and move forward. But me personally, how do you guys feel about this? Letting this thing go for another couple days and seeing if it's going to roll over. If you guys get nervous and we trade up above today's highs tomorrow and you want to get rid of it during the day, that's fine. I will not be selling it during the middle of the day. I will wait for it to. I will wait till the evening times before I do anything like that. So I won't be doing any of that. But basically, right now, I'm saying I'm going to hold this USO because nothing has changed. We're not at our support. We're just basically sitting here, just kind of chilling here. Okay. So there's no real change yet on this USO for me. We've not broken the lows, but we've also not bounced up either. We just basically had a day that just paused. So me personally, I'm going to go ahead and be a little bit cautious, and I'm going to go ahead and let this thing play out just a little bit because as far as I can see, everything is still working out just fine. Okay. TBT, that is the other position here. TBT is working out phenomenally. Right here we had our support becomes resistance, 2 different resistance. Guess what happened? We came right up to the resistance, and I've done nothing but roll over ever since. Everything has went just fine, except for the fact that it took about a week longer to roll over than we thought, which is fine. That is time decay. That is fine. That is time going by. So at this point, I am going to continue to watch this and see if it's going to continue to drop. If it continues to drop and we get the IV to continue to drop, I will hold it. I will hold it for a little bit longer and look to get much more out of it. We have a nice profit already, but I'm going to go ahead and shoot for over that 50% return and see if we can get another drop here back down towards these previous swing lows. Do you guys see anything wrong with letting this thing go ahead and play out and letting this thing drop? I know we're in the money on it. I know that, guys, so I'm not always looking to run for the fences and take what I have. If everything from a technical standpoint is working out just wonderfully, I'm not ever looking to run for the fences. You guys kind of agree? Everybody's still in this, guys? I'm getting some yeses. Getting some yeses. Alrighty. All right. So yes, I'm going to go ahead and let this thing work out. Running tire shoe. So anyways, I'm going to let this one play out too. You guys will be getting an email alert within the next couple weeks, maybe within the next couple days, for me closing these positions out. I'm going to look to close these positions out in the next couple days. So especially if we don't get a continued drop, if oil doesn't start dropping again, or if TBT doesn't start dropping again, I will probably look to maybe take my profits and move on to the next position. So that's where we're at right now on TBT. Pandora, here's the one we want to talk about. What is going on with Pandora? Well, we have a support, which we talked about before we took the trade. We got in the trade on a pop, looking for an extended move up with what? The stock market, the SPY, looking for everything to push to the upside. We've not gotten that push in the markets, hence, look what's going on here with Pandora. One thing we did talk about last week was support, and we placed our order to where we could use it as support. So if it breaks support inside 20 days, we're at 24 now, I'm going to be looking to get out. I'm going to be looking to get out of the position. But, mind you, we are at support here. So if we get a bounce here in the next couple days, we have nothing to worry about. We have nothing to worry about here. We're at support, looking to get a bounce, and as long as that happens, we're still in good shape. We're still in really good shape here. So I'm also not going to head for the fences on this one as well. Granted, we've only had this for a week, and it's went against us. But all we need is a little bounce here, and we'll be back in the black. So I am going to do nothing on Pandora either, unless we start trading below our sold strike, and it's within 20 days. We still have 4 more days till we get within 20 days, and we're not even within our sold strike. Our sold strike is 25. Our sold strike is 25, so it's not even that we're below that yet. So anybody who's getting nervous about this is whenever you just put your skills to work and you just trust what you have, and you just let it play out. So at this point, there is nothing for me to do with Pandora either. So tonight is a huge just update night. We have some trades that are profitable. We have Pandora, which is against us. We have the spiders, which are, well, they're not terribly against us, but there are a couple pennies here against us. So all is definitely manageable, though. So do you guys have any questions here about Pandora? This is the one that I've been getting questions on, and that's simply because some of us aren't quite aware and understand that, hey, sometimes even if we stayed in this range, we do have an opportunity to make money in the long haul. So I'm not panicking just yet, guys. We're going to go ahead and hold it. We have 2 profitable and 2 slightly against us at this point. I'm waiting until John, I'm always in this position. Anytime I say, that's a good question. He's talking about the 20-day. 20 days is just a rule of thumb. It's my personal rule. It's not some magic number, John. So that is my personal rule. So I'm just talking at the end of 20 days. If we have 20 days left and we're below our sold strike, I'll look to get out of it. But everything I do in this program is done after markets. So I have a lot of guys who go to work throughout the day. They come in here to monitor their positions in the evening time. I'm gonna stick to that, and I'm not gonna manage these trades intraday like I do my own personal portfolio. These positions we put on in this class are 100% managed in the evening time, and they will always be that way. Okay. At least that's where my goal is, to keep them this way, unless something changes and or whatever. But that's my goal. So we're gonna keep managing these in the evening times. Okay. The spiders. We've already looked at the spiders, but we might as well check them out here since we do have a position on. We sold the 197s. We bought the 195s. 24 days left, and we are trading at 98. Should we do anything? Nope. This is as simple as it possibly gets for me, guys. Not much for me to do here. I will just we just went over all our rules. The reason I said tonight, the thing about tonight is there's not going to be any crazy new rules. Sometimes repeating rules and understanding them a little better is just as good as figuring out something new. So this is such an important rule for me to watch that 20-day point, watch that sold strike price, and see exactly where we're trading at. But right now, bottom line is the market is at 198. You can see that right there, 198.01. And our sold strike is 97, and our bought strike is 195. So there's absolutely nothing for me to do here, especially since we dropped on not crazy volume. It's not like we had any volume spike when we pulled back. We just flat out pulled back, as we talked about earlier. Sometimes the market takes a little pause. Sometimes the market takes a pause. And if that's the situation that we're in, we're fine because we have room and we have time. So I'm really not going to do much about this position either. I'm just going to continue to watch the markets, let them play out. And then if I need to adjust them, obviously I will send out an alert. But hopefully we don't have to go down that road, and that's not what we need to do. So is everybody on board? Everybody good with that? Everybody all right with what we just went over? So I know lots of you have these trades on. So let's get to he goes, let's get to the new trades. All right, that's fine. All right, we already know these trades are doing well. We're looking for a future bounce here in the market, but we are, for the most part, technical traders unless something's coming out. Then we'll start to rethink some things and see if there's something else we should do. But for the most part, we are technical traders, for the most part. So with all that being said, let's go ahead and let's go over some of these markets. What do we want to do? We want to collect premium. Let's take a quick look here at the VIX. VIX has had a nice pop up here, guys. So, is the VIX down at extreme lows? Nope. Is the VIX up in the range that it's found resistance? It's getting there, and even when it does pop up, it's only there for anywhere from a day or two to maybe a week, and then it just tanks again. So, we're looking to sell some premium. So we want the VIX to drop. So we're looking for something with some high IV. Okay. So we're looking for something with some high IV. Now, I have some positions that I would prefer over the others, but I'm going to leave it to the group. Here's one that somebody in the trading room today asked about. I'm not sure who it was, but I went ahead and said, well, as long as you're not over leveraged on the spiders, because we already have the spiders, and to put a Russell involved in there too, might be a little bit too much. But if you only have like half size on the spiders, the Russell may be a very interesting option for you. What's going on here with the Russell? Well, we're at support. In worst case scenario, we do have support here. So basically we're looking at the 10s as our low. We have no crazy volume going on. We do have somewhat of a high IV, but not too bad. Anything above this green line is nice high IV. We're not quite there yet, but still decent IV. So we got some decent IV here. And let's go take a look here at what we can do here. I already looked this up a little bit. Looking at 24 days, that's a nice, healthy move. We always like to look at between them 20 and 40 days. So just sticking to the Octobers. Go over here to the puts. Let's be very conservative and go to the 109s. Let's sell the 109s, buy the 107s, and we can get 52 cents out of that sucker. 52 cents. Okay? So we can do 52 cents on the IWM, and that's the 109s. Let's look at some percentages here. That is 109, that'd be 108.50. 108.50. We're looking at about a 65% probability. Actually, 66% probability. Okay? 66% probability. So let's keep that in mind, guys. That's IWM. How bullish are you? That's basically what we're saying there. And not to mention, I didn't even do the 10s. I did the 109s, 107s. So our break even is right in here. So as long as we stay above there, by expiration, we are rocking. Okay? That's a decent option if you're not too leveraged on the spiders already. Here's another one that may look familiar to some of you. We got the VXX. We got the VXX, the VIX, guys. What do we have here? What's the pros and cons here? Well, we have a downtrend. We have a pullback, and we're getting bearish on the, not to mention, we're getting bearish on the VIX. Remember, we just went over and looked at the VIX. We're getting bearish on the VIX. Maybe not today or tomorrow, but within the next week or so. So maybe if we could put some type of break even up here and look for a quick pop to the downside, we can make some decent money here. What do we have? Do we have IV somewhat high? Green, green, green. High IV, high IV. Yes. So our IV is up nice and high. Let's go take a look at some of this. It's currently trading at 29.23. I'd say I would like to keep it below 30. Let's look at like 31. Let's go take a look at like the 31 here. If we look at the 31s here, we're going to go to the call side because we're looking for the market to go down. We're going to sell calls. So let's right click on the calls and let's sell the 31s and buy the 33s. 38 cents. Where does that put our break even? Or where does that put our probability? Right about 66%. So we can collect 38 cents for 66%. We just now looked at IWM, and we can collect 52 cents for 66% probability. Or we can do VXX for 38 cents and have a 66% probability. But we have a little bit higher IV here on the VXX. I'm just giving you guys check marks for whenever you guys look for your own positions. These are just check marks for you to pay attention to whenever you're looking to take your own positions. Okay? So these are just check marks for when you go through to take your own positions. Here's a whole different animal. It's United States Steel Corp. A little bit different here, huh? We just went from one extreme to the next. But what are some of the big things that stand out here for you guys? What are some of the big things that stand out for you guys here? What are some of the big things that stand out for you here? Why would this be of somewhat interest to me? Uptrend and high IV. Done. The most perfect answer. That's all I care about. Uptrend and high IV. That's all we have to worry about. After we do that, let's just find a price. Where do we think this thing's going to stay above? I would hope it stays above 42. What do you guys think? I would hope it stays above 42. So let's go ahead and look over here at the deal, and let's go to these 42 puts. Sell the 42s. Let's buy the 41s for 27, or we can buy the 40s. We collect 47 cents. So that puts us about 68% probability. 68% for 47 cents collected. What do you guys think about that? And not to mention, look at this IV. Look how high that IV is, guys. Awesome. I already have 2 people basically voting for this one, and I haven't even finished the other 2. This one here is a totally different ball game. This one here is a totally different ball game. This is going back to very similar to the one that we just took. You guys tell me what this seems more like? You've already wrote it, Pandora. Yep. He wrote, nope, looks like Pandora. Yeah, that's eBay, but obviously, T already is saying he doesn't want this one, but it doesn't mean the group doesn't want it. So I keep throwing these things out there. What do I see here? If I go out a little bit farther, we see a very, very, very neutral market here, right? We have a very clear neutral market here. Now, why on earth would I want to trade a neutral market? Well, because it's had a history of it, for one. For two, its IV is very high. Sorry about that. So let's go back to these dailies because we don't want to look at weeklies because we're only going to be in it for a couple weeks. Where do we see this thing? Do we see this thing heading higher, lower, or nowhere in the next couple weeks? And this isn't the end-all be-all, guys. I am open to whatever suggestions you may have. Iron Condor, that was in my mind if it works for us. That's in my mind if it works for us. But that's adding another element to it. What I'm trying to look at is this IV down here. That is what we're looking for. We think that we have high expectations for the volatility to drop. It's like being in a candy store. Can we get them all? You go right ahead and take every one of them. We're going to pick 1 or 2 as a group, and we're going to take them. But eBay is another great option. Yeah, John. No, I'm looking at the. I'm just looking at the overall averages here. That is what this number over here is. Implied volatility. High implied volatility. Anytime you get the rank that high, treat it like a chart as well. Don't you agree? But yeah, my main focus is to make sure that implied volatility is high in its range. Sometimes it's high for its range may be 30%. Sometimes it may be 15%. Sometimes it may be 70%. I'm just looking for its range. So that's where we're at here. I'm getting 3 people saying no, so we're going to need some voters to get eBay into this lesson. But I think Pandora's got some of you kind of setting to the sideline. And then we have the lovely Energy. XLE. Got a spider here, guys. So we have a spider here. Why does this interest me? Well, we're very, very interested in technicals and 50% pullbacks and Fibonacci's and all that, as well as moving averages. So we have moving averages pushing higher. So we have a 200 period moving average at the 50% fib with high in its range IV. What do you guys think there? What do you guys think there? Let's go over to XLE. Let's figure out, hey, We're trading at 92. What would be a conservative price down here at the 90s? So if we could do like the 90.88 for a something that sounds reasonable to us, let's go ahead and go down towards the 90s. Give ourselves plenty of room. 90.88 for 40 cents. We can get 40 cents for that 90.88, and that gives us about a 70% probability. 70% probability of success the day that we order. What do you guys think about that? What is one thing for you guys? This is something that's very important. This is very, very important. I'm looking for somebody to get this right because this is something we covered last week. Why would I be less interested in trading this XLE? What about this XLE would make me not so interested compared to some of the other positions we've been looking at? Can anybody tell me? Can anybody tell me? No, not necessarily. No. Wide spreads, Johnny. Wide spreads. We're looking at 12-cent wide spread here. 12-cent and a 10-cent wide spread here. That is going to eat up quite a bit compared to what we've been dealing with. Okay, guys, you see what I'm talking about? We covered this a little bit last week, and I told you if you kind of have a smaller account or you're not trading at least 10 lots or more, be very careful and make sure you're paying attention to these spreads. This here is a 12-cent wide spread. That's a pretty wide spread. Even if you went at the mid price, let's just say you went at the mid price and you got a fill and all that, you're giving up 6 cents on each side of that. You're giving up quite a bit of your profits plus commissions. If I can spell it right. Commish. Does that make sense, guys? This is a big, big heads up for some of you that are not really experienced options traders. Some of you, this is already something that's off your radar. Yes, John's already saying that's 15% in one way. You're right. But we want to hit on this, guys. We want to make sure that everybody's on the same page here. This is a huge factor in whether or not you take a position like this. So if you're trading a little bit larger account, you're taking a little more opportunity, you're taking more contracts, this becomes a little bit less important to you. Now, this can be a lot, but this will not sting you as much as if you're only trading a couple contracts. So that's a big heads up for some of you. I didn't know if I could get you guys to remember this or not, but we covered this last week, and I just wanted to make sure you looked at it. Whenever you come into taking a position, check out the spreads, guys. If you look over here to the left, what does this watch list say? Penny increment options. Penny increment options. So this may come up on this penny increment options list, but we would like them to be a little tighter than this. Okay? So if you got a smaller account, try to get something under 4 or 5 cent spreads. Okay? He said no to eBay, no to XLE. No. Okay, so hopefully we touch base there with a couple things, guys. For some of you that don't quite pay attention to stuff like that, it is very, very important to understand what you're paying for these things. Understand what is going to cut into my cost? What is going to affect me? How is this thing going to work if it goes up and the volatility goes down? All this stuff has to be put into context and kind of understood. This is not like if it goes up, I make money, goes down, I lose money type of business. This is understanding time, price, and volatility plus the cost of doing business. So there's a lot more factors that goes into this than like say stock trading or futures trading for sure. And there's a few more elements. So for you guys that maybe don't have all these checks down or you're not really experienced, write down some of this stuff, guys, because these are just little bitty bullet points that can really save you in the long run. Like that XLE, I'm already seeing probably a handful of you guys saying, "Yeah, I don't want to do that." Already telling me, guys, Adam, don't do that. Adam, let's not take that trade. Let's look at the other ones. And that's fine. That's what I'm looking for. That's the reason that we pull stuff up like this and we go over stuff like this, guys. And we take trades that maybe help us or maybe are leaning towards maybe managing them different in the future or adding on another spread in the future. So we're working towards it, guys. But we're building it here together. We're building here. We're getting our checklist down. I've talked to several of you. Some of you are writing stuff down. And you got some really great notes. And you're already taking your own trades. So that is awesome. That is awesome. So anyways, let's go back through the three that sounds like is going to be the winner. IWM, DXX, and United States Steel. Okay, so let's go over them again, guys. We can get IWM. We can sell the 109s, buy the 107s, and we can get 52 cents, 66% probable. And we would say that our IV is kind of at its high. Kind of at its high. Okay? Or we can do VXX, which is something we traded here recently. We just recently traded this, look for a pop. We got it, and then we've been out for the last 2 weeks. But we can trade this thing. We can go ahead and we can sell the 31s, buy the 33s, collect 38 cents, and have a 66% probability. And our IV is just kind of okay as well here. It's kind of just okay as well here, don't you agree? It's got room to move up. It's got room to roll over. It's just okay. But if we think that the VIX is going to roll over, if we think the VIX is going to drop, this is as well. Okay? So now I'm going to get everybody's answer here in just a minute, man. And then here is U.S. Steel Corp. What we would do here is we would sell some puts. We would sell the 42s, buy the 40s. We'll go ahead and bring in 47 cents for a 68% probability. So we sell the 42s, we buy the 40s. We have a 68% probability, and we have extremely high IV in its range. IV is very high for its range. Do we have something, guys, that interests you more than maybe the other? Is there something that may interest you more than the other, guys? What's the group thinking here? And then we'll collectively go ahead and look to take this position. What are we thinking, guys? We got 4 positions on already. Getting some funny comments, guys. Oh, shoot. I think U.S. Steel's getting a pretty good bid. eBay's actually gotten a couple. John just added another eBay. I didn't think we'd get any, but there's more than just you, John. Wes also said eBay. But earlier I had a whole bunch of people say no eBay. I don't care, guys. I will trade anything. IWM's a decent one. You're right. But we already have SPY. We already have SPY. I think steel's leading it, guys. Anybody have anything else to say? We will go ahead and gladly put it up. But let's take another look here. IWM. Oops, sorry. IWM. If you don't have spiders on, this is a pretty decent option. Pretty decent option. eBay's getting a few little quirks here. I'm getting a lot of no eBays though. Let's look at steel, guys. Let's look at steel here. All right, what's the worst thing could happen? Well, this thing could fall out of bed and just break down through some of the support down to this 38 level. Could that happen? Of course it could happen. What happens when this thing rolls over? Looky here. These high IVs. What happens whenever this IV drops? What happens when this IV drops? Well, the price went sideways that time. This time when the IV dropped, the price went up substantially. This time when the IV dropped, it went up substantially. So if we can get this IV to start dropping, it's not always perfect. If we can get this IV to drop, we are looking for some further upside opportunity here in U.S. Steel Corp. Let's pull up the trade tab here. What are we looking for here? We're looking to sell some puts. We're looking to sell the 42s. Yes, I'll check it. He wanted me to check the 41s. Let's sell the 41s and buy the 40s, and that would be 20 cents. But if we bought the 39s, we could get 33 cents. So we could do 41.39 for 33, or we could do 42.40 for 47 cents. I'm a little bit more of a fan of collecting. That's 14 cents is a lot. 14 cents is a whole bunch, guys, when it comes to that. So I personally am going to look for them 42s. I personally am going to look for them 42s. I'm looking at them 42 40s, and I'm looking to get about a 70% probability. Okay? And what's going to happen? We're going to have a little bit of a drop tomorrow in the U.S. Steel to get a fill. Required, it just estimated about 6 cents. Let's see if we put it at 46, what it says. Pretty. I'm going to go ahead and look for the mid price, guys. I'm going to go ahead and shoot for 47 cents. All right, we got a unanimous vote here. I can tell you that for sure. So let me see here. We do United States Steel. We're doing a bull put spread. And I gave you guys a lot of options. So if you want to use one of the other ones, man, go right ahead, guys. Go right ahead. There's a bunch of good options there for you to trade. And if they spark your eye and are interest to you, put them on. And then guess what you can do? Send me an email, and we will cover all of it together. If you want to put the other ones on and you're struggling on how to manage it, send me an email. I work with this every single day, guys. So if you have any questions, just send me an email. Okay, guys? How's that look? How's that look? And we'll put the video up. I'm doing nothing to these other positions, guys. I am doing nothing to these positions. They are simply just working. They're simply just working, and they're going to stay that way. So what do we have here? Let's pull this up. We're looking to take United States Steel. People think that we're crazy for taking this. But you know what? I can guarantee that I would much rather take a trade. If I'm bullish on the markets, I would much rather take a trade in this upper right-hand corner than try to be bullish in this lower right-hand corner. Now, some people who are new to trading and not experienced or never even traded successfully think that, man, that's crazy. The market's going to reverse. Okay, when is it going to reverse? We don't know. So I have found 10 times more value trading in that upper right-hand corner if I'm bullish than trading in that lower right-hand corner if I'm bullish. Okay? Let's look at some of the stuff that we've already done here. Hold on, let me pull this up. Let me move this over here, guys. Sorry about that. I'm just trying to maybe touch on a few things here, guys. Let's look at what we've done so far and where's our success been. Looky here. We traded Halliburton back. When was it? What's today? 9. So it would be right here. We traded Halliburton. Look what we did. At that point, when we traded Halliburton, where was it at? Upper right hand corner. Upper right hand corner. So the same thing applied there. Since then, it's went sideways, but we went through a lot. Halliburton was our first position. Let's go to the next one, INFA. Now, we've taken a lot of goofy stuff here, a lot of different stuff here, guys. We took a bearish position here. What happened? Downtrend, another profitable trade. Here's another one that might spark you. Look at this. Why on earth would we take love? Look at this thing. We took it right in here. No, right here, actually. Why would we take this? Where was it at? It was in the upper right-hand corner of the page when we took it, right? We took it right here. It was in the upper right-hand corner, okay? Same thing. And these are all profitable, guys. These are the actual trades that we took in this live trading room. Looky here. I'm looking off the exact list that we have right here. The exact stuff that we called out in here in our nightly emails, I'm just going right off that list. So I'm just showing you a proven track record. Here is obviously sideways market. We got a couple of these. We got Pandora. But for the most part, what are we doing? We're taking positions that most people who are not successful will not take. Why? Because they think that the market is done. Why is it done? You know, I've spent the last 2.5 years running a trading group and trying to get people to understand that why would you start picking tops and why would you pick bottoms? How many people you have been short the market for the last 5 years? Okay? Same thing when it was falling. So just keep on trading what you see and just trade what you see, guys. Not what you think is going to happen. Trade what you see. Look at what we keep on trading. This here was actually, this wasn't a directional bias. This was our iron condor. Why? Things were trading sideways, weren't they? We took an iron condor right here. We took nice profit on an iron condor. Okay, guys? So I'm just trying to vent here to some that are thinking that the market's a little overcooked. Same thing here. And then VXX. Imagine this, guys. We actually went counter trend. Why did we go counter trend? Because we were very, very, very overcooked in the markets. So that was one exception. But other than that, guys, pretty obvious what is successfully what's working successfully for us. What would I do for eBay? We will cover it. eBay, I would look to put something down here at the 50s. Anything below the 50s. Maybe what do we do? Sell the 50s, buy the 48s. So if we get a pop up here, I'm not against eBay. I think this is a decent position. So, and eBay is a fun one, guys. For you guys that are halfway experienced options traders, what you can do here on eBay, if you did sell the 50s and bought the 48s, the puts, you sell the 50s, you buy the 48s. If this thing pops up here, this is going to be making good money. Then you can come right up here and sell something like a 57, 59, and now you turn it into an iron condor. And as long as this thing stays in this sideways crap that it's been in, we showed 3-year chart. It's been in a 3-year sideways chart here. You can collect on both sides. Just something to think about. Just something to think about for some of you that are a little more experienced and understand the price just a little bit better. Just something to think about. Okay. So eBay, I think what we looked at, let me just pull up the price here real fast. What makes more sense here? We're looking for them puts. If we did do the 50s and we did the 48s, we collect 36 cents. That would put us at about a 75% probability. If you did the 51s, you're looking at about 52 cents, and you're looking at 70% probability. So the 51s, I don't like the 51s. That's too close. I would go for the higher probability and put it down below there, below. So I would do the 50-48. That's just my opinion. But this is a higher risk position. Why? Because we don't have a directional bias. We are sideways here. We are very sideways, but we have a high IV. We are bouncing off of some support here, and we're looking for this thing to push on up here. But I do believe that we have a wonderful position here with our United States Steel. And another reason that I am I'm actually good. I'm happy that we were taking this. We're getting diversified here, guys. We are not getting all of our eggs in one basket. We have oil, we have bonds, we have we have an equity, we have an index, or basically an index, and now we have steel, guys. So we're starting to spread out. We have 5 active positions going to be on as of tomorrow, assuming we get filled. So that is what we're looking for. That is good, nice and spread out across the market. Looking for some nice opportunities in basically every industry. We're long some, we're short some. So, does anybody have any questions at all? Any questions at all? The trade is United States Steel. Sell the 42 puts, buy the 40s. We're going to do our best to collect 37 cents. I'm so sorry, 47 cents. And that is a day order. Very important. That is a day order with an expiration of October, guys. Any questions here at all? Any questions about this week's decision? United States Steel Corp. Any questions at all, guys? If not, I'm going to wish you guys a very good evening. I'm going to say thank you for coming by. Expiration is October. Yes, we're doing the Octobers here. I want to thank you guys for chiming in. Which day? The October expiration. There's only one day. Okay. Let me know, Jose, if you have any questions. The BA. I don't even know what that is, John. Oh, bid and ask for amateurs. There you go. Oh, yeah. Thank you, John. John just says he's not going to forget about the bid and ask spread. All right, there you go, guys. Another thing we learned, we reiterate on our 20 days, our sold strike, something to be very cautious of on that. Be careful with that sold strike after 20 days, 20 days left or less. That's a big bullet point to understand. At least for me, that's my rule. And then watch them bid-ask spreads. If you have a smaller account and you're not trading larger size, it's very difficult to make up on a big spread if you're not trading a little bit larger size. So just something to keep in mind, and a reason to maybe if you have a watch list or you're building a watch list, make sure them are tight bid-ask spreads on them instruments that you're looking to trade. So, okay. Any other questions here, guys? I will be sending out emails. I will be sending out alerts. I'm assuming we're going to be taking profits on some of these positions within that before we meet again next Tuesday night. We have some really great positions working out here, and some other ones that just have not broken any support or resistance. We're just waiting for them to bounce. So we have some great things going on here still, like usual, and we got a new positions going on. So I will send a confirmation email saying we were filled, and anything that I do to change things, guys, you'll be getting them emails in the evening time to place orders the following day. So if there's no more questions, we're going to go ahead and wrap this thing up, and I'm going to wish you guys good night. I'm going to say thank you very much for being here. All your input is awesome. It really helps out run these classes like this, guys. So I appreciate anybody that puts input in. It really helps it go well. So thank you, guys, and let's just continue the success. I see nothing changing here, just more successful trades to come, and we'll just keep doing what we do. So you guys have a good night. I will see you guys next week. See some of you in the trading room in the morning, and in our email alerts at night. You guys have a good night.